Hello there. This is James, and you're watching OneRoyal, and it's live. But it's not just OneRoyal and it's live. It's OneRoyal and a watch-along of the main economic event happening this week, which of course is the non-farm payroll. But before we get into all of that, don't forget these little broadcasts, these little videos are for educational purposes only, and in no way whatsoever should ever be treated as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With it out of the way, let's get started. So yes, indeedy, we have NFP Day. So happy, everybody, NFP Day. You know, which of course everybody knows is a major economic event which happens the first Friday of every new month. NFP, for those who are on in the know, stands for non-farm payroll. But the question, especially for newbies who are new to all this, may ask, what is the NFP and why is it important? Well, let me explain. The NFP is released by the US Bureau of Labor Statistics. The non-farm payroll, NFP for short, presents the number of new jobs created the previous month. In this case, we're talking about July. Now, this does not include farm workers, hence the original name, non-farm payroll. Now, in theory, the higher reading is potentially seen as bullish for the US dollar. A lower reading, as in a lower job number, is potentially seen as potentially bearish for the US dollar. Now, today's NFP, the expectation is for it to come in at 80,000 new jobs created. So we're talking about 80,000 new jobs created in July. But here's the thing. Last month was a real shocker. Real shocker. Because the previous number of the last NFP was announced at 57,000 versus the expectation of 110,000. Like I say, this really did put the cat amongst the pigeons when this occurred as well. And in fact, if we look at the NFP over the last, well, from the year onwards, we can see, it's been, what's the best word to describe it? Erratic. January had 160,000 new jobs. February minus 156. March 185. April 115. And May 172. And of course, like we said, June 57,000. So are we going to get, and it's the big question which the market is going to be asking, obviously, are we going to get another disappointing number today? That's the big question. Let's start off with a couple of opinions of other people who has their say on what they think this number is likely to be. Starting off with Dask Bank, I hope that's pronounced it. They actually think the number's going to come in reasonably acceptable. Okay, this is what they have to say. Most leading data still point towards solid labor market conditions, and though weak labor supply growth also weighs on employment growth outlook. Clear as mud to me. They also go on to say the unemployment rate remains the Fed's primary focus. Hey, yes, I've got a comment. Hello there. Good to see you. Oh, yeah, so as a nutshell, don't forget, guys, this is, of course, a live show. It's a live show. So you can chat away, talk to me, say hello to me, share your opinions, whatever you wish, So feel free to do so. Hello back. Hope you're good. So, yeah, here's the other thing. This is their point, is what they said. Okay, is the unemployment rate, they think, is going to be key because, here's the thing about NFP Day. Yeah, we make a big, fuss about the non-payroll. We all get overexcited about the non-farm payroll. It's the headline rate, but it's not just the NFP we get today at the same time. Of course not. It's not just that. Because at the same time, we also get US unemployment, expectation 4.2, average earnings month on month, expectation 0.3%, average earnings year on year, expectation 3.5%. So we have all this data to come as well. Here's another opinion on what they think about the labor market or what this number potentially could be. This comes from an economic expert at Oxford Economics University, I guess, or economics sector, by a chap by the name of Matthew Martin. He says this: the slowdown in the monthly employment gain report by the ADP, which happened on Wednesday, by the way, aligns with our assumption, as he continues, that the labor market isn't in a period of overheating, nor is it a cause of concern, as the number is still within the range of our estimate of break-even price. He also goes on to say, of monthly employment growth consistent with unemployment. So he's quite confident about the number. He's saying that overall the US labor market is quite steady and everything we're seeing is pretty much what they expect. But here's the big question. It's very good what a bank thinks. It's very good what an expert at maybe Oxford or economics Oxford, whatever that is, sector of Oxford University, I don't know. Obviously sounds very important either way, and people are listening to him, so it's got to be a very wise fellow. But more importantly, instead of what a bank thinks or what a professor thinks, what the market's really interested in is what the Fed thinks. Because don't forget, this number, this job number, this unemployment number, can greatly affect what the Fed may do when it comes to interest rates. Now, here's the thing. Strategists, or strategists, shall I say, at MUFG BTMUS, he observes the general sentiment among Fed officials appears to be consistent with a slow hire, slow fire. As in, long as there's a slow hiring going on and less people being made unemployed, it's not a bad thing. As well as that, they also think that policymakers, they expect the overall labor demand to cool in a substantial or sustainable pace. Persistent stickiness in core inflation keeps focus anchored on price stability. In other words, they think things look by what the Fed will look at will be quite steady. And in fact, and here's the sticking point, it comes down to inflation. Fed member Alberto Mussolini, he's not an Italian dictator, I promise you. Apparently, he delivered a very hawkish message on Thursday, underlining the Fed's inflation target at 2%. Remember, we're not at 2%. We're a fair bit above 2% at the moment. So again, there is still that hawkish sentiment in the Fed. But what assets are we going to look at on the back of this announcement? There's two in particular I'm very interested in keeping an eye on. One of the good people out there can have a guess which one of them. Which one of them I'm going to be very interested in. Share a comment. Let me know what you think. I'll give you 10 seconds to guess what asset in particular I'm going to be looking at. Because those who know me know there is on one asset. Oh, here's a comment. And they've guessed it right, of course. It's gold. Gold in particular is one of the assets I want to have a close look at today. Now, it's not just because I'm in love with the yellow metal. It's because we've had some fair bit of movement this week with the yellow metal. Okay. Now, for example, as we said, okay, gold gave momentum earlier this week on the back of a disappointing ADP job number. In fact, it soared. Okay. On that day, because the ADP did come in lower than anticipated. Okay. On that day, okay, gold closed $176 higher following the announcement. And here's the thing, even since then, it has continued its gains, and we're now currently trading at levels not seen since the 17th of June. Okay, so this potentially could give gold, if we get a bad number again, could give gold the opportunity to rise again, which is really interesting, because the simple equation at the moment, not saying I totally agree with it, but what the sort of gold traders are simply looking at, of course, at the moment, or putting like 1 and plus 1 together and getting 3, is a lower job number equals less chance of a rate hike by the Fed, potentially lowering bond yields, yay, potentially meaning higher gold prices. So that's one asset in particular I'm going to take interest on this announcement. The next is going to be the dollar yen. Okay, why? Greenback was hiding high against the yen last week. And then on Thursday, the 30th of July, the BOJ intervened. Okay, intervened. And the dollar yen crashed from 163.40 to 159.55. Now the dollar yen is currently trading below 159, so that momentum has continued. Now, that was down to the fact, like I say, the BOJ intervened. Will this job number force the BOJ's hand again? That's the question we need to ask. Anywho, potential scenarios. Got about just over a minute left. Potential scenario number 1. NFP has announced higher than expected. US dollar gains strength as hope fades over future rate cuts. Lower, actually. NFP is announced lower. Dollar falls under pressure and the market rejoices with anticipation the Fed will cut rates in the future, or will not cut rates in the future. Potential scenario number 3, NFP comes in expected and the market is lukewarm to announcement, because that can happen too. Potential scenario number 4 is announced either way and the market ignores it. There's much more concern with geopolitics, as in Strait of Hormuz, things of this nature, AI. Boom. And potential scenario number 5, NFP is eclipsed by other job data. Anywho, we're running out of time, so let's get ready to rumble. So, of course, we have gold at the moment. You see, look here, look at that. What a lovely move that was. 35. That was on the ADP day, as you can see. This is why I'm particularly interested in it. And what else I want to look at quickly? The dollar yen on the daily. See, this is when the BOJ intervenes. So these are the 2 in particular I want to watch. In particular. Anywho, we're running out of time, so let's get ready. Let's get ready. Oops, get rid of that. Thank you. Let's get ready to see what it is coming in. Oh, boom! Boom! What was that? Minus 23,000. NFP comes in minus 23,000. Look at that. Boom. Look at that. Boom. So breaking news, everybody. NFP announced lower than expected. Not just lower than expected. Negative. Minus 23,000. Whoa, what a move. This reminds me of the good old days. It really does. Reminds me of the good old days. It really does. Of when we used to see real big movements. Look at that. Currently trading at $3,352. Let's have a quick look at the yen. Let's see what happened to the yen. This is the other pair I wanted to look at. Dollar yen. Boom! Look at that. Lovely. Lovely little move. Let's have a look at a bigger picture as well. That's a nice move. Nice little dramatic move on that. Nice. Very nice. Okay, let's have a look at some other figures as well. Let's look at some other figures. Let's well see where we are, what the actual numbers were. So like I say, negative 23,000 NFP. Not good. Unemployment rate, slightly higher than anticipated, 4.1%. So that's a bit better. Average earnings month on month, worse, negative 0.1%. Average earnings year on year, negative 3.2%. So overall, not good. Only unemployment rate is something which is a little bit more favorable. But that's a nice move. That is a nice move. That's on a one. Let's have a look at a slightly bigger picture. Let's move it to 30 minutes. Still really nice. Still a lovely move. Like I say, gold currently trading now around $355. Dollar yen. We'll have a look at something else in a minute. Dollar yen trading at 157.67. Let's have a quick look now as well. Let's see the damage across the board. Let's see how the euro did. Euro, nice little skyrocket on that. 1.1558. The cable, who's been having a little bit of a tough time of it recently. Hey, it's had a nice little recovery now. 134.78. Let's have a look, see if we can at the dollar index, if I have it available to me straight away, which I don't, unfortunately. Oh, yes, I do. Dollar index, nice little drop, 99.60. So overall, nice movement. That's a nice NFP. And that is a nice NFP. We haven't had something like that for a while. Very nice. Don't forget, of course, this is indeed a live show, so you can ask me questions anytime you wish, anytime you like, or share me what your opinion is. What do you think about this all? Are you shocked like I am? Are you excited what I am? What do you think now this means for the Fed, what they're going to do? They can't raise rates at the moment, can they? Or can they? Can they? You know, like I say, Deutsche Bank or DAX Bank, sorry, they did say unemployment, in their opinion, is more important than the NFP number. Unemployment did come in better at 4.1%. Okay. And though indeed, like I say, everybody who knows NFP can often shock you. Next reading could be a lot higher. But what's your opinion? Let me know what you think. And in fact, let's have a quick look at the numbers again. If there's any revised numbers. Ooh, actually interesting. Yes, there is a revision. NFP, don't forget last month, okay, they came in at 57,000. It's been revised lower at 20,000. So 20,000 negative 25,000 this month. So yeah, there is two not so great numbers after all. Let's see how gold is getting on as well. Lovely move on gold on that. So yeah, there we go. Shocker, negative, exciting, as always. Well, a really good, nice little movement on that today. Don't forget, of course, this is indeed a live show. Okay, so you feel free to ask me questions. More like I really prefer is like when people share their opinions, because this is the whole point of having a live show, is being like, you know, other people sharing ideas, letting them what they think, and things like that. That's the idea behind these little shows. And let me know what you think. What's the Fed going to do next? You know, what's going to be their next move? You know, are we going to, you know, what does that mean? What does it mean in general? I mean, to me, like I say, the revised number is more interesting. You know, that it was 57 was the number, but it's now been revised down to 20. And now we have negative 25. That's 2 very poor months. Does that say something? Or are we really looking at that saying what we said earlier on, what the Fed was saying? Slow higher, but slow fire. You know, because like I say, initial claims, interestingly enough, they stayed around 200,000. They hadn't seen a big growth in initial claims. Those are close, of course, they don't know initial claims. Initial claims is the number of people who signed on for unemployment benefit for the first time. So are we really seeing that? So is it just a headline rate, or are we going to just be shocked for a little while, Is the market going to react? But then really look at it. This is the bigger picture thing. It's not so frightening. Let me know what you think, what your opinion is on that. You know. Oh, and other things. Don't forget, we got coming up very soon. Okay, very soon, a brand new, well, 2, in fact, brand new live shows coming very soon. One will be almost daily. One's going to be more asset based, on where me and a colleague will talk in depth about a particular asset of interest we have that week. So we've got 2 night live shows coming very, very soon to be obviously promoted and shown only here at OneRoyal, obviously. And don't forget, we do this regularly. So, stay tuned. And we've, like I said, got 2 new live shows coming. Oh, can't wait for a new show. Excellent. We've got 2 new shows. Very, very excited. Good to see you, by the way. Hope you're well. Hope you're having a great day. Yeah. Okie dokie. Okie dokie. I don't think there's any questions today, which is not a problem. Not a problem too. Not a problem at all. Anyway, like I said, have a look out. Get ready for the new shows coming very, very soon. And thank you for those who have come along to watch a very exciting event. I got carried away like I always do. But that's the whole point of loving the markets like I do. But in a nutshell, breaking news came in a lot lower than expected, negative 25,000, as opposed to anticipated 80,000 new jobs created. So very disappointing. So that is in the nutshell. Anywho, one more little comment. Well, like I mentioned earlier on, again, say initially we could see, good question, by the way. The question is, with the announcement of the NFP results, how long can it affect the market for? That's the question, like I said, that I just mentioned earlier on. That is headline rate. We maybe get all excited about it, and then it will sink in down to the whole philosophy, not to panic, because what we're seeing is a slow higher, slow fire scenario, which means there's no panic. Because as I mentioned, initial claims at the moment is remained at around 200,000 for a long time. So there's not that panic. And plus unemployment has dropped to 4.1%. So eventually that may sink in. So this could only be like an initial, wow. And then everybody goes, bigger picture, that sort of thing. The question is just such a huge negative amount. It is, but we've seen worse. A couple of months ago, it was negative 157. Again, it depends how the market looks at it. You could look at it and go slow higher, slow fire, so not panic stations. It depends how it digests it. Initially, for now, of course, we're going to get all excited, hence the big movements we've seen, gold, yen, and everything against the greenback. We've seen a big shocker on that. But again, how long this lasts depends how important the market sees it. Thanks, James. You're welcome. Thank you. Anywho. Don't forget, like I say, we've got 2 new live shows coming very, very, very soon. Very soon. Which more information and announcements will be released and keep you informed. So stay in touch with that. Of course, don't forget, keep an eye out for more watch-alongs, because I do watch-alongs on big events when I'm anticipating potentially exciting movements like we saw today. If you like this sort of thing, by all means, subscribe if you like. If you could put up with me, my over-top eccentric enthusiasm, by all means, give me one of these. It's nice to know that you like what we do. Anyway, till next time. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. So I would suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.